Hey everybody, I hope everyone is doing well and had a good day. This is going to be a recap of the Emini 5-minute chart for Tuesday, March 4th, 2025. And I also want to add at the end of this video, I have a couple of tips for system development. So going into the day, we had a gap down. In the context here, big sell-off, pretty decent rally, but best case for the bulls here is probably a trading range after such a big down, followed by about a 50% pullback. I always like to at least glance at the Globex chart and see what happened overnight. I like to see the 15-minute chart. So here's the context going into the day. Here's yesterday's close. We had that big down, big up, tight trading range for many hours, and then finally a pretty decent breakout and follow through for the bears here. Looks like a minor reversal. So again, best case for the bulls here, probably trading range and probably more sideways to down. You can also think about gaps as simply breakouts. They operate the same. Trend bar, breakout, gap, it's all the same. So the gap down into the day, you can see it as a bear breakout. And because of the, look back to the regime, the always in direction, it's always in short. Like I said, maybe close to a 50% pullback, but best case for the bulls is trading range. So bulls are hoping there were buyers below the swing point. We gapped down below that swing point, and you can see what happened. Bears got one bar of follow through after the gap down on bar 1. Bar 2 tested the low of bar 75 yesterday. That's a breakout point test. We broke out below. Remember, a gap is a breakout. So we broke out below the 75 low, retested it on bar 2 and 3, found sellers both times. Market has to go lower to find traders willing to buy. Bulls who bought are trapped. Bears who did not sell, trapped out, both looking to sell, both uninterested in buying until the market is lower. So we had a sell-off on the open, and it's pretty good for the bears, but you'll notice there were some dojis in there, and dojis are implied pullbacks. So as far as counting legs, you might say tight trading range on the open, bear breakout, pause, second leg, pause, third leg, sort of climactic bar, one of the bigger bars in the sell-off. And the expectation after a third leg is either a reversal or a deep pullback. But after so many consecutive bear bars in a micro channel, the odds are the first reversal will be minor. Just to add a bonus, bar 6 closed below the low of bar 5. Traders might wonder, is this a measuring gap? And sure enough, we found support at that target. So this is more likely profit taking by the bears. This rally probably more due to bears taking profits than bulls aggressively buying. But that's a pretty significant rally, and it certainly broke a trend line. And when that happens, you're going to have trapped traders below. So a 3-4 bar bull micro channel, second leg up likely, but also pullback likely. And I urge everybody to do market studies, study something, whether it's 1 bar breakouts, breakout and follow through, 3 bar micro channel. Just have a few filters so that maybe you have 8 or 10 or 15 signals a day, maybe even less. But just find something to study and observe market behavior around, and you'll start to find you can back up what you're saying when you say things like, okay, 3 bar micro channel, second leg likely, but also deep pullback likely. And also here, it's sort of similar. Big down, big up, and then here, big down, big up. This retracement looks like it's less than 50%, but it's still significant enough that we're either in a trading range or a weaker bear trend, a bear channel. So the bulls break the bear trend line. This sell-off is probably going to get a second leg down, but now the rally is also probably going to get a second leg up. So this creates confusion and trading range price action. And sure enough, we went sideways. The bears tried to get their second leg. In this resumption attempt, fairly weak. You can count maybe 1, 2, 3 legs down, or simply 1, 2 legs down, testing the low close of bar 10 and their support. So traders who were trapped down here, who's trapped? Bulls and bears are trapped. You have bears selling for any reason. Tight bear channel. Technically, it's actually a simple leg. It's a breakout. Bears selling for any reason, willing to scale in. And then you have bulls who probably are not buying until there's more buying pressure. Sure, some bulls might buy. It's aggressive, but maybe it's leg 3. But in this case, not ideal for buying. Then here, maybe bears exit above 11, aggressive bulls buy. But the point is, the rally up to 13 traps traders. You have bears who sold down here, and all of a sudden we're up here. They're scaling in. Or you have bulls who did not buy, and now again we're up here, and they missed a pretty decent rally. So the bears are disappointed with the extent of this pullback. The bulls are disappointed because they missed a pretty solid rally, and this creates support. And it creates support because of those trapped traders. Bulls and bears are disappointed. One thing I found with my studies is in this case, low close often gets retested, and it's going to get retested more often than the swing point, in this case, the low of bar 11. So that's my first target, to see, is the market going to retest the bar 10 close? And oftentimes it does. Maybe 80% of the time it does. And if you also think about what Al talks about, the dynamic of major trend reversals, with a bear trend line break, next you expect a retest of the trend's extreme, and only then maybe a major trend reversal, but trading range more likely. So here's the trend resumption attempt. We're testing the low close of bar 10, but it took several pushes by the bears. So is this trend resumption, or is this simply a pullback of this rally? Are the bulls going to get a higher low major trend reversal? Some might argue the resumption attempt is too strong. We need a trend line break. Well, there's the trend line break, 21. So maybe this needs a second leg down, but 21 broke the trend line, probably buyers below. And the bears trying hard to test the swing point. They really want to get to a new low, because at this point the market is either in a trading range or a bear channel. But for it to be a bear channel, we need lower highs and lower lows. And right now, we actually have a higher low from 11 to 21, and even 24 is above bar 11. So bulls doing a good job defending stops below bar 11. Again, it might be a major trend reversal. We still are probably going to get a second leg up after the rally to 13. I'm not sure if 15 and 16 was enough, and I'm not sure if 21 and 22 was the second leg for the bulls. It's also breakout mode. And oftentimes, a triangle like this is going to be a final flag. So context for the bulls is okay for a major trend reversal, sell off on the open, but it might just be the bottom tail of a bar on the daily chart, especially if we don't get continued selling. And here we're going more sideways than down. And the more we go sideways, the weaker it gets for the bears, because the bears are willing to sell very far below the moving average only if there's momentum. And if we start to lose momentum and start to go sideways, suddenly the bears are selling below the average price, but they're getting average price action. We're going sideways. And this can lead to a rally because if there's not momentum, bears want to sell a pullback. They want to sell value. We also have the market cycle problem for the bears. Spike, pullback, channel, getting a higher low. We're probably going to retest either the 11 high or the 7 high. Doesn't really matter. Just about the same price. The point is, it's the start of the channel, which often becomes the top of a trading range and resistance. Like I said, the rally is still probably going to get a second leg. So the bulls getting their second leg, but it's fairly strong. And like I said, it might be a major trend reversal. Many consecutive bull bars, strong enough rally to reset the leg count, probably leg 1 here after breakout mode. Now there's resistance here, so we have to see what happens. But it looks like there's a first entry short below 30. Maybe traders sell below a second entry, but we never get it. We end up getting a rally far above this line, which was supposed to be resistance. And what happens when the market breaks out of resistance? It becomes support. You had bulls taking profits here, so they're selling, which causes this minor reversal, but it looks like bears didn't sell because we went higher. And bears who did sell here got trapped, and that's going to create support at this horizontal red line. So because of that, a pullback can lead to a bull flag rather than a reversal back down to the bottom of the range. At this point, we've had 10 or 15 bars up, and it's a fairly tight channel, so the first trendline break will probably be minor. And just compare the trendline break or the strength of the breakout that broke the trendline here compared to here. Steep sell-off, but then a pretty decent trendline break. Steep rally, but a really weak trendline break. You also notice, and you can argue in both cases, it's 3 legs. 1, 2, 3. But up to 13, it's more of a parabolic wedge. Parabolic wedges are minor. By that I mean you expect a minor reversal. It's a wedge on a smaller time frame, but it's a breakout on a higher time frame. Here, there's much more two-sided trading. There's overlap. There's clearly 1, 2, 3 attempts down, and we're testing a breakout point, which is expected to be support. And this rally is strong enough that you expect buyers below and a second leg up, which is what we got here. Now up to 45, maybe it's a late leg. We're also testing the high of the day, the low of yesterday, so probably going to be resistance here. But strong enough rally for a second leg. And there's another problem with this rally other than the fact that it's a late leg, and that is it begins with an outside bar on 43. And I've mentioned before, I haven't done a formal study on this, but I've seen it enough to know that when a breakout begins with an outside bar, in this case a bull breakout, the high of the bar before the outside bar often gets retested. And if you think about why that is, 43 is an outside bar, it's a trading range bar, and 42 is an inside bar. You expect, at least on a smaller time frame, it's more clear this is a trading range compression, lower high, higher low. In a trading range, you can sell above a bar, scale in, and make money. Outside bar, you can do the same. Outside bars are expanding triangles, but in this case, if you sold, you were trapped into a losing position. And if you did not buy because of the same reasons, you missed a pretty decent bull breakout. This is going to create support below, just like over here. So this horizontal line, I have it on the high of bar 42, which is the bar before the outside bar, which led to this rally. We can see what happened. 1, 2, 3 pushes down to 48, and then a bull reversal bar testing the high of 42. So the bulls will probably get a second leg. Does the 3-bar bear micro channel need a second leg? It might, but you can more clearly see there are 3 legs down in here and not as clear in here. So the momentum for the bulls is stronger than it is for the bears, and the context also supports the bull breakout more than the bear breakout. So the bulls get their second leg, another breakout strong enough to reset the count. Problem here is that we might have a late leg 55. And these are tough because the breakout is strong enough that it's probably going to get a second leg, but it's also a late leg. And you look to the left and it's big down, big up. And you have to wonder, is this a big trading range? And if it is, where's the top? Now what the bulls have going for them here is that yesterday's close might be the high, so there's still room to get there. But the problem is we also could turn down anywhere in here because of the gap down traps traders. And this is now looking like 3 pushes up. But again, what the bulls have going for them, other than the magnet up here, is this is a pretty tight channel, which means it's a breakout on a higher time frame, and any reversal will probably be minor. So in other words, the bulls will probably get a second leg because the bears need a second reversal. Minor reversal here. Maybe you can exit below 60, but still not much of a trendline break. Pretty decent bear bar might be enough for a second leg, but where is the significant trendline break? And then bad follow through. 61. Big bear bar, but then weak follow through. So still minor reversal, maybe a high 2. And the prior days, high, low, open, and close are always test magnets, and that's why I have the close of yesterday drawn with a horizontal red line. And what we got in this case was a vacuum test of yesterday's close. And here, again, for the bulls, it's a late leg. Maybe it's leg 3, leg 4. Even in here, you can say 1, 2, 3 legs up. It's also parabolic. We're breaking out of this bull channel line. And it's also a dueling lines pattern. So we're breaking out of a couple of bull channel lines and we're testing resistance. Remember what happened the last time we were at the close of yesterday. There was a fairly big gap down with follow through. So in other words, traders thought this was a fair value to sell. Bulls and bears were in agreement, and we had to go lower to find traders willing to buy. So the question here is bar 71 a measuring gap that's going to lead to even higher prices, or is it exhaustion? Is the market trying to break out of several bull channels and we're at resistance? So reversal 72. 72, certainly a bar that always in traders respect. Bulls buying for any reason. Even if you bought the close of 71, it's probably wise to get out below 72. And bears can sell below 72. And in this case, we sold off really violently. What's interesting about this is the rally all the way from 24 to 71 is a bull channel. You have to remember the market cycle and what happened. Well, the bulls were trying to break out above the bull channel, but the vast majority of the time, channels evolve into trading ranges. So, what does Al say? Bull channel, bear flag. And you also have to think about the higher time frame context. This is a bull trend, but it's minor. On the 5-minute chart, it's a bull trend. But on the higher time frames, it's simply a pullback. You can see on the daily chart here, it's really a minor reversal in a more bearish regime. So here, 72, have to respect it, strong enough for a second leg. Really good follow through 73. Certainly would want to get out of longs and probably sell the close. Brief pullback above 75, and then a very quick second leg down. And then profit taking into the close. So I said I have some tips for system development, and I don't want to spend too much time on this in this video. I do plan on making a video on how to conduct a level 2 study. A level 2 study is just observing market behavior. And a level 2 study is what actually allows you to build systems with confidence and with statistical data and evidence to back it up. So, like I said earlier, just pick something to really focus on and study and see it through. So try not to change your mind, try to stick with one thing. I've been guilty of that in the past for sure, where I have this idea and I start working with it, and then I see a different idea and I change what I'm doing and I work with that, and then I change it again and change it again. I've been very guilty with that in the past. And so what I would say, first tip is to stick with one idea, whether it's 1-bar breakouts, breakout follow through, 3-bar micro channel, whatever it is. Just start with a visual test. Look for something that, don't even do a formal study at this point. Just say, look, 3-bar micro channel, sell the close, you get follow through. 3-bar micro channel, buy the close, scale in, you get a second leg. 3-bar micro channel, buy the close, you get a second leg. 3-bar micro channel, buy the close, second leg. Over and over. Here's a failed one. But the point is, find something that stands out to you. Could be, like I said, any of those breakouts. Maybe it's second reversals, whatever it is. Pick something to study. And then the idea with the level 2 study is to understand the market behavior around what you're studying. So the whole point of the level 2 study is to be able to extract data from it. You've heard me share things in the past, like what I found with my micro channel study. Well, one thing I found is leg 1 in a trading range gets a second leg 77% of the time. And it actually tests the high or low close 85% of the time. That's really significant data and something you can definitely work with. And not only that, but when I'm doing my research, I'm collecting samples of all micro channels with certain filters so that there's not an overwhelming amount of samples. But the point that I'm trying to make is your level 2 study gives you enough data when it's complete to probably build 10 systems. And if you think about it, what that means, what I mean by that is you've heard Al say it, there's no rules in trading. There's no cookie cutter, one size fits all, perfect setups. And I've talked about why. You're never going to get a perfectly good trade because there's always an institution taking the opposite side of the trade. And no institution that stays in business is going to take any perfectly bad trades. And that's exactly what it would be if you had a perfectly good trade. So there's always a trade-off with risk, reward, and probability. So that's the first thing. So there's no rules. There's no cookie cutter, do this every time. But what you can do is filter your data. So certainly want to track what's the leg count. Is it a trend or is it a trading range? Because if you do these things, you can start to filter the data. That's how I know that a 3-bar micro channel in leg 1 in a trading range gets a second leg 77% of the time, tests the high or low close 85% of the time, because I can filter my data. And then what I want to add with that is you're not going to trade a setup like leg 1 in a trading range the same way as you would trade leg 3 in a trend. So you're going to have 3-bar micro channel or breakout follow through, whatever your signal is. And I recommend focusing on some sort of breakout and look for a breakout, pullback, second leg. You're going to have all these different contexts. You're going to have leg 1, leg 2, leg 3, trend and trading range, bull case and bear case. So there's going to be a lot of different scenarios. So the other tip I would say is don't try to build a one-size-fits-all system. I would take the time to build a system specifically for leg 1 in a trading range. And the way you do that is by gathering data in your level 2 study. Hey, the market does this X% of the time. I can work with that. Or maybe when it's leg 2 in a trading range, you either get a deep pullback or a reversal most of the time. So maybe you fade those. Or leg 3 in a trading range, the same. Leg 3 in a trend, maybe you buy a deeper pullback instead of buy the close. But the point is, you really want to consider taking all the data and building a number of different systems rather than trying to have one system with all these different rules. So I hope that's helpful. I know it's something I wish I heard, so I really hope that's helpful to somebody. And that's going to be it for today's video. So thanks everybody for watching, and I hope everyone has a good night.